Good afternoon and welcome to Markets Today. Thank God it's Friday. It's always my favorite day of the week, trying to evaluate what did I gain, what did I lose, what did the markets gain, what did the markets lose. And as you can see, my dress today, I'm in red and I'm also in green. Just a testament to what we saw in the markets. They were down, they were up. What was happening? That's a conversation that we will be having later on in the show today. We have a lot lined up for you. If it's a Friday and you know what we do on Fridays, it's all about Ask Mbithe, trying to understand what do you know about investments, what do you want to know about investments, and more importantly, how can we be able to help you get the right insights, the right knowledge, connect you with the right partners so that you can make the best in terms of planning for your future wealth and getting the right assets for that. That is a conversation that we will have later on. We have something extra special lined up for you. I won't let the cat out of the bag yet. Let's talk about the basic facts on what's happening on the NSE, and then later on I'll pull you in and give you a glimpse of what to expect as we continue with the show. Now, this week has been a bit of a hot and cold week. We've all been racking up the conversation of the coronavirus. What does it mean for economies? What does it mean for Kenya? Now, we're getting to the point where globally and also locally, investors are becoming a bit more comfortable with the risks affiliated with coronavirus. Yes, it will affect global economic demand. Yes, there will be casualties, if not more casualties that have already been reported. And yes, it's already started finding its way into Africa. Only yesterday, we did see pronouncements of the first coronavirus identified in South Africa as well as in Egypt. So it's only a matter of time before it spreads to other countries. But this week, what is different from last week is this. People have come out, especially the government of Israel, and said they possibly have a cure to this coronavirus that they could possibly be sharing out there. And this is giving investors the sense of, okay, it's not a good thing, but at least we're getting to the point where we know the worst that it could be, and we're able to mitigate the risks associated with it. That said, we did see the stocks both locally and globally start off on a low, but then as the sentiment began to get a sense of what to expect on coronavirus, it tapered off. Now, what happened on the Nairobi Securities Exchange? Safaricom is about 50% of the market capitalization on the Nairobi Securities Exchange. It's a much higher percentage when it comes to trading. I think for every 100 shillings that's traded on the stock exchange, expect maybe 60 or 70% of that to be affiliated with Safaricom. Because of its heaviness in terms of trading and in terms of value, it's always identified as a key barometer to understand the temperature of the NSE and what the investors are thinking. Now, Safaricom in the week came to a near low of slightly below 28 shillings, 28, 27 shillings, and we were seeing investors getting a bit jittery. What is this coronavirus? What will it do? Should we be selling out of our stocks? And on that weakness, we saw a lot of trades happening because other investors were able to translate one thing. There's a difference between sentiment and fundamentals. Sentiments is, what do I feel? There's a lot of fear in the air. Fundamentals is, okay, does this fear translate to lower earnings? Does this fear translate to a change in their business environment for these companies? So fundamentally, nothing changed. Now, veteran investors always know if there's fear, then come into the market and buy. If there's greed and everybody's excited, then that's the time to get out of the market. So based out of this fear, we saw a lot of trades coming to Safaricom, pushing the price up back closer to about the 33 shilling level. At least by today, it was trading above 29 shillings. Now the question for you, based on this jitters, are there still opportunities and pockets of opportunity for you to pick up stock? I'd say maybe not. If you picked up stock at the beginning of the week, perhaps you had an opportunity. But now Safaricom has come back closer to the 30 shilling mark. We've seen equity and KCB get closer to the 50 shilling mark, beginning that any opportunities to buy this stock have slowly faded away. But what the thing is to take out from this is anytime you see any volatility in the market, it's always a good opportunity for you to evaluate and see whether you should be buying stocks. We did tell you last week on Friday to be looking out for the Safaricom stock. If you took it, you have certainly made 20% or thereabout in 1 week. If you don't, always stick with us and we'll tell you the next time to actually dip into this particular opportunities. let's step away from the Nairobi Securities Exchange. I want just to give you a heads up in terms of what other activities were happening. Let's take a look at what CBK did this week, and that's the Central Bank of Kenya. In a surprise move, the Central Bank of Kenya came out with an announcement informing the market that it will be buying dollars from this month through to the end of June as a way of mitigating against any risks affiliated with the coronavirus. Now, this was a bit jittery for the market because we did see the currency trading against the dollar hit one of its lowest marks in this year and get to a level of about 102.35, 102.5, depending on what side of the trade you are at. Question is this permanent? Is CBK concerned about something that we need to pay attention to? Well, I tried to look at it differently and say, this is what is happening. Central bank is a key buyer of the currency at this point in time. Reason being, the other buyers in terms of people who buy dollars to import from China, the demand has come off because there's nothing that is leaving China, at least not the volumes that we were used to. This has given CBK a more dominant position as being one of the single buyers of currency, at least in the short term. So if I am the biggest buyer of a commodity out there, doesn't that mean I have slightly more power in defining what price I want to buy this commodity at? In other words, I actually think that the weakening of the currency could actually strengthen in the coming weeks. And the question is, what does this then imply if you are an investor in the Securities Exchange? Two things you need to pay attention to. Actually, one thing that you really just need to pay attention to. NSC, it's traded by foreigners. Foreigners need dollars to come and buy assets in this country. If there could be a slight strengthening of the currency or at least any volatility, what does that tell us they will do? They'll probably remain in their asset classes that they have, and if they expect any weakness, they will continue to buy. On the flip side, if they expect any strengthening of the currency, then they may not be very quick to buy until it tapers off and they get a sense of where the ceiling is or where the bottom is in terms of either the strengthening or the weakening of the currency. What am I really saying? 102, 102.5, I think it's short-lived. I think we'll probably continue trading range-bound between 101 to 102, 102 being on the very lower side. And that tells me that we continue to see increased interest on the Nairobi Securities Exchange. Because if the coronavirus affects other countries, say like US stocks, then these stockholders will be looking for opportunities for growth in the Kenyan market. And also this is circumvented by the fact that the Fed cut its rate by the largest percentage points, 50 basis points, signaling to the market that there is increased weakness in some of these global markets. What am I really saying? Safaricom, KCB, Equity Bank, EABL, British America Tobacco, the key stocks that are always traded by the foreign investors, will continue to see increased interest as we get into the year. We'll continue to see slight volatility on pricing. And if you are looking to buy these stocks, I think the opportunity will be for you to see anytime negative sentiment comes into the market, pick up a bit more stock. I hope you have learned something from that. And then finally, corporate actions. Corporate actions, who was reporting numbers this week? CFC Stanbic reported its full year numbers, some slight growth there of 2 percentage points in terms of the profit after tax to 6.4 billion. It would have been stronger, but management said that they had to make a one-off provision during the final quarter of the year in relation to non-performing loans and some guarantees that they had made. This was my key takeout from the investor briefing that management had on Monday. They are excited about the economy in 2020, but then they still see opportunities of economic distress. Yes, it could be good, but then there's still some sticky points that could make it not so good or not as rosy as we would have expected. That tells me as an investor, as a person in this country, that I need to buckle up. I need to save more, and I need to be very strategic in terms of my investments if I am going to be able to make a return. That said, Stanbic Bank issued a dividend that was 22% higher than the previous year. 7.05 shillings is what they will be paying shareholders for the year 2019. This translates to a dividend yield of 6.3%. And I always say this, instead of taking your money and putting it as a fixed deposit account at Stanbic Bank and earning 5% or less, why don't you go and buy the stock and earn a dividend of 6.3% or even more during the year? Of course, don't touch your emergency funds. This is over and above your emergency funds. The funds that you don't need in the short term and you just want to put them away and build stock for the future, then that's a consideration that you certainly need to have. Okay, now I know I've talked a whole mouthful in terms of what's happening in the markets and what you need to focus on. But this is the thing that I actually got out during the week. We had the privilege and honor of having an interview with Mr. Alois Chami. He's been investing in the stock exchange from the 1970s. Were you born then? Did you even know what was happening if you were born then? I mean, to hear somebody who's been in the stock market for close to 50 years now, that's a lot, at least for over 40 years. And this is what he told me. He has learned to rely on professionals, people who understand what is happening, but more importantly, any stock that he's invested in, he goes for the investor briefings, he goes for the annual general meetings, and he reads up each and every single item of research or anything that comes out on these companies. He's always invested in knowing more about his investments and understanding where to put money. And because of that, he considers himself a veteran investor, has made a lot of money, and is now able to pass that generational wealth as well as knowledge to us as well as to his biological children. That said, all of this I have said might be foreign or not. If it's foreign to you, my encouragement is take this video, look at it again and understand what are the key concepts. This money is yours. If you gain or if you lose, it's really the buck lies with you. So it's your responsibility to actually be invested in trying to understand how do people make money, how is your money growing, and more importantly, how can you preserve it. We will be taking a short break, and I want you to join us when we come back for about 10 or 12 minutes or so to listen to Mr. Chami. And he's explaining to us, why did he decide to get into stocks? How did he get into stocks? And how did he even start his purchasing process in terms of selecting what counters would make him money? Over and above that, he also gives us a breakdown of his asset allocation. 3 key areas is looked at: real estate and stocks as well as businesses, and he helps us understand how we can be able to divide our portfolio of investments. And then after that, he is also a happy camper in terms of being a shareholder of Stanbic, so we want to hear what his thoughts are. Then, once we are done with that segment, because it's Ask Mbithe, I am joined here by my colleague, Mr. Kaut, to understand, does this information make sense for him? What would he like to know? And what are his current investments? And I would like you to also join this conversation online, and that is #AskMbithe, and you can reach out to me on my Twitter handle, Mbithe Muema, or you could reach out to us on Metropole TV and tell us, what would you want to know? And more importantly, is what Mr. Chame is saying something that you resonate with? It's a Friday. Let's have fun. Let's discuss stocks. Let's make some money. And that is Ask Mbithe. See you in a few.